Good morning and welcome to Odoo Live. My name is Noel, Community Manager here at Odoo San Francisco, and thank you once again for joining us. Today I'm joined by Minendra, one of our business advisors, to talk about inventory valuation in Odoo accounting. Welcome once again, Minendra.
Thank you, Noel.
It's always a pleasure having you. So if you have any questions regarding today's topic, you can leave them in the chat and we will try to answer them at the end. However, if we run out of time or the question is more elaborate, you can always send us an email to webinars@odoo.com, or if you would like to get in touch with Minendra directly, Minendra, what is your email address?
My email address is mip@odoo.com.
Great. Again, if you showed up late or would like to watch this presentation again, you can always use the link that you're using to watch us anytime after we finish our live broadcast. So I believe all of that being said, go ahead and take it away, Minendra.
Awesome. Thank you all for joining us today. This is going to be a bit of a long one because inventory valuation is obviously a more advanced topic in business in general. Specifically in Odoo, it takes some specific configurations inside of the system in order for it to calculate properly. So our agenda here will be, we're going to go over costing methods first. First, we're going to go over standard price, then average, and then real costing. Then we will go over periodic inventory valuation, which now in Odoo will be associated with manual entry in terms of accounting, and then with perpetual inventory, which is the automatic recording of money movements inside of our system. Then finally, we will go shortly over landed costs, which then can be added on to your inventory, which then you will have a better idea of the valuation of what you have in stock at that moment. So first, we'll go over costing methods here. We're going to go over standard price. With standard price, it's fairly simple. You have a simple cost associated with it, and you set that in the inventory record, and it's computed again based on one set price for a product. So there's no average, which is obviously would be associated with average costing, and it's not the real cost of from order to order. So with that being said, the purchase order price has no effect. So there's two functions here. Obviously, you're going to buy something at a specific price, and then you're going to associate that price with your valuation. With standard price, you set that price because you know what it costs, and that is the only thing that's taken into account. And I'll show you that in just a moment. So let's switch over to our database here, and just to give you a quick overview of our system, if you have not already seen and you haven't played with Odoo already, this is what your standard database will look like when you open it up. I've only downloaded for this demo the necessary applications that will be required to demonstrate how inventory valuation works. So I've downloaded the sales, the purchases, inventory, and accounting. So with standard price specifically, we're going to go into our inventory, which is where this gets configured, and we're going to go into our master data. We're going to look at one of our products, and I've set up a few products here for our demonstration with the name associated with the specific product that we're going to use for that specific costing method. So in this case, we're going to use the Stratocaster Junior. And we have the standard price costing here, and I've already set up the product category. So when you want to set up the proper costing method, you do it in your product category here. This is going to default to an all category, which you can configure if you'd like, or you can go ahead and create a new one entirely. So I've already set the standard, so we're going to open up and edit this and look at the configuration. So in the inventory valuation inside of your product category, it's going to give you three choices. It's going to give you standard price, average cost, and first in, first out, which has been translated from our real costing in previous versions to now being, just first in, first out, because that's ultimately the default that happens when we do perpetual valuation, which we will cover later. Then you're going to decide how you're going to create this valuation. So with perpetual valuation, you're going to need automated. Again, we'll cover that later. But for the sake of our standard price, we're going to do a manual input. So basically what we're saying here is that your valuation will not be automatically recorded until your accountant or whoever is bookkeeping for you goes in and creates a manual journal entry. So that being said, we're going to go ahead and save this in and create a PO so we can see how this works. And when I say cost price, I'm talking about this field right here, and I will be using that throughout this demo. Basically, with the cost price and standard price costing, it takes into account this field specifically. So when you buy a new supply of this specific Stratocaster, you're going to see the inventory valuation of units times this price. So let's see how that looks. We're going to go ahead and go into our products. Actually, let's just go straight from our Stratocaster here. We can go move right into our purchased units. So we're going to go in here and we're going to create actually this is our analysis. So that's going to give us the views of how many we've purchased. So I'll go in here and create a new quote. So we're going to go ahead and buy it from Fender because it's a Fender Stratocaster. Then we can have a vendor reference if necessary, and we're going to add a product line here. And here, getting my notes together. So we're going to create a product for the Stratocaster Junior with the standard price. And let's say we order 8 units. And the unit price is set at $10. Now we're going to save this in, and we're going to go ahead and confirm the order. And now we see that we have an $80 value pre-tax. So now if we go back into our inventory and we look at our product of our, oh, I'm sorry. Actually, I was supposed to pull that in. So we're going to go from purchase, confirm the order, but I didn't actually receive the order. So what we're going to do here is go ahead and validate this. This means that we're bringing in inventory into our system. And so once I apply it, now it's already been brought in. So now we have a purchase order here. Now we're going to go back to our inventory, and now we can see, or we should be able to see, that there are 8 units in stock, as you can see here. Now to see the valuation of this specific product, we can click on our on-hand unit, and we're going to see our value here. Actually, we'll go back to, this is not showing up because it has not been configured properly, but we're going to go into our products, and then we'll go to reporting. Inventory valuation of current inventory. So now we can see what we have of, this is the only thing we've bought at this moment. So this is what we've validated. At 8 units, we have $80 value. So as you can see, it took the cost price that we spent on this product and then multiplied it by the amount of units and created the value of $80 specifically. Now, what we're going to do is create another PO here to add on another 4, for example. So we're going to go ahead and use this standard again. We're going to say buy 4, but this time instead of doing the cost price at 10, we're going to do it at 16. Okay, so that should equate to a number of 64 and our pre-tax. So we're going to go ahead and save this, confirm it in, receive our order, and validate. Again, this means that we have now brought it into our inventory, and now we have an extra 4 in our inventory. So now we're going to go back to inventory, and actually we can just go into inventory valuation of current inventory, and what we'll see here is a total quantity of 12 units. And even though we bought it at $16, it took the cost price from our inventory record. So it's a value of 120 and not the 80 plus the 64. Okay, so that is basic. This is basic standard costing. Now, just to show you a little bit further, I'm going to go and create a sales order for the same to show you the difference in quantity on hand and how that looks in the valuation. So we're going to go ahead and create an order and say John Doe wants to buy a guitar. We're going to go ahead and click on our Stratocaster Junior. We're going to say he wanted to buy 10 for his store. Okay, and that equates to a sales price of $150 total, because I associate the sale price as $15 a unit. And that's obviously changeable as well. I mean, anything in the system is fairly intuitive, where you can set something as a standard, which will automatically get pulled, or you can, while that it will get pulled, you can always change it while you're doing something in the system, like creating a new sales order as well. So we're going to go ahead and save that in. We're going to confirm it. And now we're going to deliver it, because we have to push it out. So whenever you validate a delivery receipt or a delivery order, what you're saying is, I have received this item, or I am putting this box on a truck and I'm sending it out. So we're going to go ahead and validate that, and then go ahead and apply. And now we're going to go into our products and see our Stratocaster Junior, where we have a on-hand unit of 2. Now, in order to see, okay, so we have this here, and we're going to go ahead and go into actually inventory, because in order to get the inventory valuation of our current value, we're going to go ahead and see it. And now we see that it's at $20 only. So as you can see, standard pricing is fairly intuitive. It's fairly simple. You just set it on our product, where you set a cost price, and it will calculate your valuation based upon that standard set price. And there's no average. It doesn't recalculate based upon your purchases. It just takes that number and then calculates it for you. That being said, we're going to move on to average costing. So back to our slides here. I'm going to move forward. Now with average pricing, the system will automatically recalculate the cost price based upon multiple multiple purchase orders. So whether or not you have a set price, it won't make a difference. So most times, if you're going to use average costing, you should just leave it blank, because it will automatically fill that number for you eventually. If you add a number there, I believe it'll take that number and then start averaging with that number. So just something that you should know. One thing to note about our average costing is that when something leaves a warehouse, your cost is not affected. So it won't recalculate an average based upon something leaving your inventory, for obvious reasons, because it has nothing to do with the cost price that you're buying this product at. Now, just to show you how this works. So say we buy 8 guitars and at $10 each, and that would be a stock valuation at a cost price of 10. That's our normal standard pricing. Now say we buy an extra 4 units at $16 each. What happens is, it takes that first valuation of the $80, then it takes the 16 times 4, adds it together, and then divides it by the quantity on hand. So it's going to equal a cost price of $12. Now let's say we subtract 10 units by selling them. Again, the purchase price is unrelated, so it doesn't make a difference. But what the system does is it takes your stock valuation, subtracts the value of the units, the initial cost price, and then divides the result by the amount on hand. So that would be 24 divided by 2, because we've sold 10 units of 12. Oh, went too far there. Okay, so let's demonstrate this. So now we're going to go back into our purchases, and this time we're going to buy a different, we're still going to buy them from Fender, because these are all Fender guitars, and this time we're going to select our Stratocaster, which is under our average cost. So for this one, we're going to buy 8 units, as said. The unit price will be $10. And so we see, as demonstrated in the slide, it's a pre-tax valuation of $80. Now we're going to save this in, confirm the order, and we should have we're going to receive the products and validate them. This basically says that we've received our products. It's in our inventory now. To show you in our inventory, now we can see our reporting and our inventory valuation of our current inventory. So we're going to see both the Stratocaster Junior and the Stratocaster. And at this point, because we've done all of those movements as far as selling and buying, we're at $20 for our standard price, and we're at $80 for our average costing for our Stratocaster. Now, let's go into and create another purchase order for the 4 units at the $16. We're going to create a new one, and we're going to say vendor. We're going to create a strat, average price at 4 units and $16. So now we have a cost of $64 pre-tax. We're going to save it in. We're going to confirm the order, and we're going to receive the products. Now, when we go back to our inventory, we will see that, actually click the wrong one. There we go, inventory valuation, and retrieve our inventory value. We should be able to, I haven't received them. I should have pulled that in. Give me one moment here. That's the problem. I didn't validate it. So the system won't show you what you've brought until, it won't give you the valuation, obviously, until you receive the product. So these are the specific triggers that will let you know, with more practice, obviously, if you haven't been using the system very often. If you're new to Odoo, you'll find that if you don't see the actual number that you're supposed to see, it's because you didn't do something right. So that's something to note. And so let's go back to inventory, jump back in here, go to reporting, inventory valuation. And at this point, now we will see that 12 units at 144, right? So this basically is, so basically we can see the difference of how they're calculated. And just as I mentioned just before, it takes the first order, then it takes the second order, and then averages them out by the quantity on hand. Now, let's say we are going to sell 10 units of our Stratocaster, okay? So same thing, John Doe wants to buy another 10 units of a different guitar this time. We're gonna go add product, and it's our Stratocaster, and we're going to sell him 10, $15, and we're gonna save this in, confirm it. And we're going to create an invoice. Obviously, we can invoice the lines. But for the sake of this, we're going to just go ahead and do the delivery and not do the invoice for now because it's unnecessary. But obviously, I mean, if in fact this was going to be a delivered product, you would want to create the invoice so that it creates a journal entry for your sale, basically. So we'll go back into our inventory. And now we will see the renewed value of our inventory based upon what we've sold. So our numbers check out. Based upon the math we saw in the slide, we've gotten back down to $24 because we've sold 10 units, and it divides our $25 value by the 2. So our cost price here would be $12. And now the great thing about this is it will automatically show you in our cost price. So your cost price with average costing gets automatically changed based upon subsequent orders. So the system will automatically calculate over and over and over again based upon different prices that you've paid for different vendors or a specific vendor. And actually, I'll be doing another webinar next week on purchases and inventory, which I'll go more in detail. But basically, you can set a vendor to a specific price and a minimal quantity, which allows automatic reorders of goods. But you can have multiple vendors, is the point. So this number here will calculate based upon all orders made on this specific inventory item, no matter who you're buying from. So it'll give you an average cost, but it can lead to a disproportionate understanding of what your inventory valuation is. Ultimately, because you may buy the same product for $10 from one vendor and then $15 from another. And that obviously is a business decision to make. And something I didn't cover initially on this is that, and I'm going to take a slight side tangent here, is that when choosing a costing method, you have to really talk to your accountant and figure out what the right costing method is for your business. Standard is great if you're doing a straight linear valuation of everything you buy and you have set prices for everything, but life is not so pretty all the time. So sometimes you got to figure out the best costing method for you and your business. That being said, while our accounting and inventory valuation tools are very, very robust and strong for your reporting purposes, and while a lot of this can be automated, we really highly recommend making sure that you have an accountant on your staff or somebody that you consult about your business regularly, so that you understand where you're at. Now, jumping back into this. Sorry for that tangent, but I think it was just necessary to put that out there because it did not initially. So back to this. Basically, your cost price will be recalculated based upon various subsequent POs that you make in relation to any given inventory product or item. Now, let's jump back into our slides. So the next one is going to be our real price costing method. And this one is a little bit more complicated, less common, just because the configuration takes a little bit more necessity and care, if you will. And it's determined by the actual price. And it has to be, it's determined by your exit method, removal strategy in your inventory. So some people use first in, first out. Some people use last in, first out. And those are the two options that Odoo will give you. But based upon how you pick the removal strategy is how the valuation will show you the value. And it's not an average. It's separated in groups by batches of purchase orders. So what that means is, say we're going to buy a guitar for eight units of a guitar at $10 each, which gives us a stock valuation of $80. And that cost price is 8 times 10, right? So then we buy a quantity of 4 units at $16 each, which then will still give us a valuation of $144 like it did the last time. But this time the cost price is broken down by the 2 different prices of these units based upon the batches. And because of the removal strategy, what Odoo will do is say, okay, so when you sell 10 units, what will happen is it will take 8 units at $10 and then it will take 2 units at $16. So it will give you a remaining valuation of $32. I'm sorry. Finally, when you buy 2 more units at $6 each, it will again create a valuation of the addition of the 32 plus the new $12 valuation and create a valuation of 44. But it will still keep the separate groups, so that way when the next sale that you make, it'll pull the entire valuation. So say if you buy or sell 3, it'll sell it at 16. It will subtract 32 plus 6, which makes 38, and leave you with the last 6. So let's see how that works. Where is my mouse? Oh, I saw it. Sorry. Having difficulties here. My mouse has disappeared. Found it. Here we go. Okay, so we're going to go into our purchases, and we're going to create a new purchase, and we're going to buy from vendor. We're going to add a line, and we're going to this time look for our, search more. We're going to look for our real price, our Telecaster this time. So again, we're going to use the same units, use the same unit price, $10. So we have a valuation of 80, save it in, confirm the order, receive the order, and now validate the order and apply. So now we're going to go back into our inventory and go to master data products. And now in our Telecaster, we will see that we've bought 8 units. Notice that the costing has not changed because at this point it has nothing to draw upon. So it doesn't, and the thing is, you don't want to have a number there. And actually, if we click on edit, you'll notice that it it shouldn't actually allow me to change this based upon our configuration here. But this is still manual actually. So then I can set it if I want to, but the way this is set up is it's first in, first out, and this is our costing method as far as real goes. It used to be real in past versions, and now it's just defaulted to first in, first out. So you don't actually need to put anything here, but that's what it defaults to. So it will actually allow you to add a price if you'd like, but in the matter of valuation, this field is not actually considered at that point. So we're going to save this in, and we're going to see that we have the 8 units. And in order to see our inventory valuation, we're going to go at a specific date, or at a current, and we're going to see that our 80 units is in our reference, and we have 80 here. Now, this little I information button, it will show you once we make another purchase order in just a moment, you'll see that this will show you both purchase orders inside of this inventory item. So let's see how that looks. We're going to create a purchase. We're going to create a new one. We're going to buy from vendor. Going to buy a Telecaster. I'm going to buy 4 units. Oops. At $16. Not $6. $16 for a pre-tax valuation of 64, or pre-tax cost of 64 actually. I'm using those interchangeably, and I actually shouldn't, because at this point it's just a cost. And obviously it translates, but it's not the right terminology. So we're going to validate this in. I'm going to apply it, and we're going to then go back to our inventory. Look at our inventory valuation. And now we have 12 units, equating to 144. But notice how it groups the various purchases by our warehouse in. And this is our reference. So internally from our inventory, we're going to see the actual delivery receipt that it's associated with. But notice that this one was at 80 and this one was at 64. So if we go ahead and click on this, we can see the actual points of details of this specific order, right? And this same with this. So you'll see that 4 units, it's 64 as opposed to the initial 10 that we bought it at. So now what we need to do here after this is basically we're going to show a sales order in this case. Same process that we've been doing here. We're going to go ahead and sell 10 units to John Doe for his store. We're going to say we want the Telecaster, and we're going to say we're going to sell 10 units as said at a unit price of 15. Save it in, confirm it, deliver it, and validate. You go ahead and apply. And now when we go to our products, actually I'm going to go from the inventory. And now we see that our Telecaster in our real price is at $32, as we said earlier that as it would be. Because what happened was it pulled the negative 112, right, from the initial 80, and then minus the 2 from our 64, which equates to 32. So it gives you a live view of, so real costing is great for tracking purchase to purchase and having a real view of how much you've spent and how much you've recouped based upon your purchases in your inventory. Now, just to give you one more example, we're going to purchase 2 more at $6 as opposed to the other prices that we've done already. So we're going to go in, we're going to create on Fender, and we're going to go into add a line, and we should, go to the Telecaster. We're going to do 2 units at $6, and that is a pre-tax cost of 12. So we're going to confirm this order, receive our products, and now go back into inventory, see our inventory valuation, current inventory, And now we see that it's, oh, I didn't, see again, even us as being, as experienced professionals sometimes forget how to do this. But the system, again, will give you the indications that you've done something wrong. So that's the great part about Odoo. And basically streamlining pieces of the business that you need streamlined. And whereas human error in an Excel sheet could possibly mess this up, Odoo won't. So here we go, and we'll see current inventory. And now we see that it's at $44 because we bought two from at $12, and now we can see that here. So it basically gives you the equation here and gives you a total of your inventory valuation. So this also works with last in, first out as well, but it'll give you different numbers, obviously, right? Because you're going to be pulling from your most recent purchase as opposed to your first purchase. It just depends on how you run your business, but this is the process in which selecting a costing method works. Now, just to go over, summarize our costing methods. Standard simply uses our cost field, as we saw. It will take the cost field on the inventory record, and purchase receipts and deliveries don't affect the cost. Now, average price is used to recalculate average costs and goods are received. So anytime you buy something at a different price, it will recalculate that cost price and automatically add that in for you. So you have a live view of how much you're spending on average based upon multiple purchase orders. Then finally, real costing is the actual cost determined by actual purchase price and delivery removal strategy. So both are necessary for real costing, and that's the only way you can actually figure out a real cost of your inventory. Next, we're going to have periodic valuations. Actually, why don't we take a quick pause here and say if there are any questions regarding costing methods specifically. Would we?
Sure.
Should we do that?
Let's see what folks have asked us. So you're asking regarding a costing method specifically. So we have
what we've covered so far.
Sure. It's one from. We have a question earlier. So does average cost method work with perpetual real valuation method, for instance?
Yes. So that's the only way it will work. We're going to jump into valuations next. I just wanted to make sure that everybody that's listening right now understood costing method specifically and how it works in Odoo. So yes, we're going to cover it, and it does. And that's actually the only way to do real costing. To do perpetual costing, you have to have real costing set. It doesn't work otherwise.
Another one from Noor Hamed. How is my inventory valuation calculated using FIFO when I import my initial inventory if I can't change the cost on the product profile?
How is my inventory valuation calculated using FIFO when I import my initial inventory if I can't change? You should be able to change the cost. Again, it depends on the type of costing method that you're using. The only time it won't be able to be changed is if we're using perpetual valuation, which we'll see in just a bit. But you should be able to change it. As you saw, with the real costing alone, you can change the cost price. It's not locked. It's only when we do real costing and perpetual valuation that it will be different.
Let's see. And then another one regarding real costing method. If you set the cost in the product view, what effect does that have on Odoo?
Set the cost in the product view. Could you actually expand upon that? I'm not quite sure what that means specifically.
Yeah, we might.
We'll revisit that.
Yeah, exactly. I was going to say.
Again. Yeah, with a little bit of clarification, I'm sure I can answer that. Okay, so let's jump into valuations. So first, we're going to do periodic, and then we'll jump into perpetual because it's basically the most complicated valuation method in our system. But periodic valuation is when goods that have been received and delivered don't have an immediate effect on your accounting, because this is a manual entry in terms of creating a journal entry for your valuation. So that means that you can choose what period you'd like to do this at. It could be monthly, quarterly, yearly even. Some people choose to do that. But basically what ends up happening is that your accountant needs to go in and basically post a journal entry regarding the value of your inventory at any given period that you decide. And this is standard and how it's most commonly done in Odoo. With perpetual valuation, you will be able to do this automatically. And so you don't necessarily have to ever go in and do anything specifically. It just automatically will, every time there's a money movement, it will automatically create journal entries in the system. So that being said, this is how you would normally log your inventory valuation. In your assets would be a debit, your expenses would be in costs of goods sold, then your expenses would be purchase goods and inventory, which would be your starting value. So let's look how this works. And this time we're going to be going into our accounting app. So I already have this open. And in Odoo, you're able to open multiple tabs at once. So you could be in 3 or 4 different apps while doing things in one and then affecting others, which, obviously, as you know, Odoo talks to itself and it's a live movement. So anytime I do something and basically validate one thing or another inside of the system, what will happen is that you'll see it in the other flow as long as I refresh it. So specifically for periodic costing, periodic valuation, we're going to look at our Jazzmaster. So we're going to go into purchase, and we're going to create a flow for, just so you see on the accounting side eventually, but we're going to use a different product because I've set a different product category for this specific item. So we're going to buy it from vendor once again. We're going to buy our Jazzmaster this time. This is our periodic or manual input method. We're going to buy, let's say 5, or let's just say 15 at a cost price of 10. And it equates to 150. At this point, we're going to save this in. And we're going to confirm the order. And we're going to receive the products. And we're going to validate. Now, in order to create the vendor bill, though, we have to go back to our purchase order and say create bill. And when we create a bill, this is now a functionality of our accounting software, our accounting system, if you have it installed. Obviously, you couldn't do valuations and post them if you did not have that. So this should be fairly obvious for most of you that are listening. What we do here is obviously set it to where our bill accounts, and these bills will be reflected in our bills, in our vendor bills here. Okay, so I'm just gonna go ahead and add this in, and we can put in the bank account. So just to speak a little bit about our accounting app, with a slight side note, is that our accounting system is really awesome in that we have a API with a company that's literally built connections with every bank on the planet. So if you associate your bank account with Odoo, it will automatically do bank reconciliations. It will do reconciliations of bank statements that you have in your system, and it will cross-reference it with all of these bills and purchase orders that you have created. So sales and or purchase orders, any money movement. So it should balance by itself. So that's something to know because I find that really awesome about our accounting system. That being said, we don't have one associated, so you don't have to put anything there, but you can if you'd like. So now we're going to go ahead and save this in and validate it. And we're going to register the payment. Now we're going to associate it in our bank. We're going to do it manually, and we're going to validate. And so now we have a reference number for our bill and now in our accounting system, we can go ahead and refresh this. And what we'll see here is our vendor bills. And we will see that the vendor bill that we just associated gets shown up here. In this case, it's in our account interim account, but it actually I should have set that to our expenses. That's how that should have been done, and that's my mistake for not changing that myself. But the system will auto default to the interim account as opposed to your expenses. But this can be set to whatever you need it to. So if we go back to our periodic manual product category, we can see that these accounts are associated specifically with where they should go. So let me show you that really quickly just to refresh if anybody forgot. So we're going to go into our Jazz Master and notice that now we have 15 units in hand. And actually this is standard, so it should have been periodic and manual. So that's something that I should have I didn't properly do. So here we're at standard price and we're at manual, and notice that all of the accounts are already associated. These are not associated by me. I did not set these. These are default accounts, but you can actually set how this works. So when you do expenses, the one thing I did change was the expenses here. That comes actually, I believe it's just no. Let me check actually. We can see on the other one, but ultimately I set it to expenses because it makes sense. When you're buying something, it will go automatically to your expenses as opposed to your interim expenses, which will come into play when we do the perpetual costing. So here we're gonna go to so let me jump back into our accounting. Oh, actually should be here, accounting. And so because we posted this, now in our balance sheet, we can see that we have current assets of 172 in our stock interim and our tax, and you have an automatic valuation as soon as you do this inside of your system and create these vendor bills. Now, something to note again is that stock moves don't have effect on your accounting until you actually go in and validate these bills. So when we actually did the delivery, you will have seen zeros all the way up and down. But because I created the vendor bill, it created a journal entry that then created a entry in our balance sheet. So now let's go into our accounting. We're gonna go into our journal entries, and I'm gonna go click out of this, and we'll see that we have one bill, vendor bill that we posted, and our bank that we posted it to. So we're gonna create one for the actual valuation of our system. At this point, let's say we have a valuation of 1,500, or actually, let's just do this. Let's look at our inventory at hand. We're gonna go into our inventory and our reporting, inventory valuation, current inventory, and this is ideally how you would go in and take this number, because at this point we have $238 of inventory in our system. But with the periodic valuation, what you're doing is you're saying like, okay, I'm going to take it on this date after 3 months, for example. We're going to input the inventory valuation at 238, and we're going to do it manually. So here we have to pick a journal. So for the purpose of this demo, I'm going to pick stock journal. Obviously, these are your chart of your journals, your configured business needs, right? So, and you can have as many as you need in your system. And for the reference, I'm just going to put stock valuation, and then we're going to go into add a line. So going back to our PowerPoint here, these are normally what you would use to create an inventory valuation journal entry. And this is the least complicated valuation, obviously, because it's fairly straightforward. So here, what we're gonna do, I'm sorry here, where's my mouse again? There we go. So first we're gonna go inventory, purchase it, oops, can't spell today. We're gonna go into our inventory. I'm sorry, assets actually. Let's just say current assets in this case. We're gonna go with 238, for example. And we're gonna go to the next one. And next one is going to be our cost of goods sold. Okay. At this point, we're going to add in. So here, what happens is the system will automatically create a credit where you don't necessarily want one. So you have to make sure that you're cognizant of this. So if we're going to do a 238, we're going to say the cost of goods sold maybe was $100. Now we need to credit these debits. So in order to do so, we'll pick the next one, which is purchased goods, but we don't have a default purchased goods account. It just defaults to expenses. So we're going to go ahead and do that. And we're going to say, and again, it will automatically create this valuation here without any kind of, without asking basically, because it assumes that you just want to create a debit to balance this portion. So let's say the expenses were 150. And then finally, we're going to add in our inventory again. Stock valuation account. Let's just say stock valuation account. And actually, I'm going to change this to stock valuation account as well. Makes life easier. And it basically calculates the remaining for you. So now we can save this in and we post. And now we have a stock journal entry of one stock journal entry for our stock valuation of $338 based upon all of our costs and our valuation of our inventory. And that is pretty much how to do a periodic valuation of in our system. Now let's go to the fun part, which is more complicated, less used, mostly because perpetual valuation takes a lot of care, and it's really recommended for people who are expert accountants and advanced users of Odoo. Ultimately, you can have your consultant do this for you, but if you try configuring this yourself and then you mess it up, it's very difficult to fix without a lot of headache, so to speak. I mean, it's just it can create a lot of problems if you don't understand what you're doing. So be wary when you're using this. If you have any specific questions on how to set this up yourself, please contact me directly or contact our helpline. They're good at giving you specific answers based upon these things. But that being said, perpetual valuation is a very powerful tool if you can harness it. What you need specifically for perpetual valuation is a real costing, which is the first in, first out designation in our product category choices in terms of inventory valuation. And what you need is not only real costing, but then you have to pick the automatic function. So, landed cost is next. But let's see how this works in our system. So we're going to go into our inventory, or we're going to go into our purchases actually, and we're going to create a new order as we've done with all of this. We're going to create we're going to buy it from Fender because all these guitars came from there, and we're going to go perpetual and automatic. But before I do this, I want to actually, I'm going to discard this, and we're going to go into our inventory first and make sure that everything's set properly. Because if it's not, what will happen is that it'll just not work, to put it simply. Also, this is where the cost is locked. When you're doing perpetual inventory valuation, it will automatically take it for you because the real costing is already set. So you can set it if you do a periodic valuation, but you cannot set it if it is in perpetual. Something to note. So now we're going to go in here and we're going to go and see. Notice it was in standard price. So this would not have worked if I had tried to validate this. It wouldn't have worked. So I have to go into first in, first out, which for all intents and purposes is real costing in Odoo, if you're joining us late. Notice also that actually when I change from standard price, notice when I change from manual to automated, notice these underlines. Okay? I'm not sure if most of you have played with Odoo or not, but basically a bold underline in Odoo means that it's a required field, which means that if you don't have that set there, it will not allow you to save this record. And that's across the board. So anytime you see a bold underline inside of Odoo, you have to put something in there. And if you don't, it just doesn't work because those are required fields. So for the sake of our perpetual valuation, and the reason why it's so complicated is because it takes extra accounts into account. So for perpetual valuation, we will be using our stock interim account for receivables and deliveries, as well as our valuation account. So it takes all three of these in terms of for when actually you sell something but haven't delivered yet, or when you receive something but haven't paid yet, or paid something but haven't received yet. So it basically makes sure that you have gotten all of your bases covered. Now, another thing to note is this is actually a good example. So this is the default. It defaults the cost of goods sold. But ideally, I mean, I like to put it in expenses just because it will go to your general expenses. And then obviously you can make sub accounts inside of Odoo. So you have the ability to associate other accounts with whatever works for your business. But for the sake of this, I'm gonna keep it in expenses just to keep it separated. Now we're gonna go ahead and save this in. And now it should work. So we're gonna go into save this, actually, go into this and purchase 10 Mustangs from Fender. And we're here, going to say 10 units at a unit price of, let's say, $10. And it's going to be an untaxed amount of 100. So now we're going to save this in. And we're going to confirm the order, and we're going to receive the products and validate. Now we're going to go back to the PO, and notice that we still have to create the bill in this case, right? Because that's still a separate journal entry in terms of how this works. So just for the sake of showing this, we're not gonna validate this as just yet. We're gonna go into our journal entries and see that we just did a warehouse in of the one we just did right now, and we see the journal entries for the stock valuation account and the stock interim account. This is not something that was used previously, and because we're using this perpetual valuation method, we have to. It basically now will record every single money movement in the system and stock movement in the system. So we get a debit of 100 in our stock valuation account and a credit in our stock interim received account. Now, once we create our bill, we will see that it will create another journal entry. We're going to validate this, and we're going to register the payment. Now we have $115, and we're going to validate this. Now we have, again, another journal entry inside of our system. So once I, once I refresh, we'll see that now we have another two journal entries for the things that we just posted. So as you see in our vendor bills, we'll see that we got $115, $100 for the actual inventory, and $15 for the tax. So as you can see, this is already a more complicated system that you're going to be using in terms of valuation. Upside, your life gets a lot easier in terms of movements because it'll all do it automatically. But there are drawbacks if things are not standard in terms of movement in the system as far as pricing goes and such. We can look at specific use cases if need be, but ultimately it will automatically take all of your movements as far as valuations and prices go. And we can also again see our bank journal that is now 115 is posted as a vendor payment and accredited in the bank in our accounts payable. So now I just want to show you guys the actual balance sheet as well. As you can see, we now see the total current assets as our stock valuation account has 150, Our stock interim is 150, and the taxes paid on all of our inventory is 3750. And we can see that also we have negative 287 inside of our bank and cash statements because we have not set up our month-end balances as of yet. And all while I was moving through the system, we've been going through, and these numbers have been changing as we've moved through the system. One last thing I want to show as far as perpetual valuation goes is a sales order, because it actually is slightly different. In most of these cases, we've done sales and purchase orders, and they've been fairly straightforward. But for this specifically, I want to show you guys the journal entry that comes with this. So let's say John Doe is going to buy another, not Jazzmaster, actually. We're going to go ahead and sell the Mustang. Sorry about that. Mustang here. Say we're going to sell, I don't know, 5 Mustangs to John for a unit price of 15 at a pre-tax of 75. We're going to go ahead and save this in. We're going to confirm it. And this, and so we also have to do a delivery item. So here we're going to see that if we look into our accounting, we'll see that nothing has changed as of now. Oops, we are not in our accounting right now. So, oops, again, let's go back to our accounting and come close to here. We're going to go to reports. We're going to go to balance sheet. Notice that the number is still the same here as far as current assets go. But as soon as we validate this and create an invoice, that number will change. So as far as our balance sheet goes, we're going to go back into our accounting and see, journal entries. And we're going to get out of our miscellaneous items. And we can see that in our stock journal, John Doe for $50 got posted. As far as our inventory stock accounts are affected. But as soon as we go back to our sales order and create the invoice, we will then see, we're going to create and view the invoice, and then we're going to validate. And we're going to register the payment. And obviously you can pick bank or cash or whatever other account that you want. And this will be your invoice number and your reference number. And at a certain point, and so in a second, we'll be able to see this in our accounting as well. We're going to go back to our accounting, and we're going to go to our journal entries. And notice now that we have a post of 8625 that we just did for that same reference number to our bank at this point. And that should basically conclude most of our inventory valuation as far as periodic and perpetual goes. One last thing, if you want to see how this works as far as inventory goes, we can change our product category. Actually, let's just go here, go to our perpetual and automatic, and edit this. If we don't put this in a stock account, we can add this actually to cost of goods sold. So let's see just a quick view of what that looks like. We're gonna go ahead and save this in. We're gonna go product categories. Let's just do one more purchase order just to demonstrate how that looks as far as cost of goods sold, because how it gets posted is different. So we're gonna sell our Mustang for 5 units. At a cost price of 10. And we're going to save this in. And we're going to confirm this order. Receive our products. Validate them. Apply them. And go to our PO. Oh, this is sorry. Actually, this is the wrong thing that I'm doing. So we're going to go to sales. Apologize about that. Let's jump into sales. Sell to John. Sell the Mustang at $15. 5 units at $15. Save, confirm. Do our delivery movement, which will affect our stock interim accounts. Create our invoice, which will affect our cash or bank accounts. or accounts receivable, really. In Odoo, our customer invoices and our, let me just show you that really quick. Accounting. Customer invoices acts as your accounts receivable. Vendor bills account acts as your accounts payable. Just so you have a understanding of that. So we're gonna go ahead and validate this. We're gonna register the payment for $86.25, and now we should see this reflected upon our balance sheet. As you can see, we've gone down $100 in total current asset value because that's how much we sold. So everything is reflected entirely live with Perpetual Valuation. So at any given point you want to see what's going on, you will have a live view of what your valuation is at that specific given time period. You can do this by time period as well if you'd like, and see the trend line. But as far as this goes in a singular point, it's fairly simple to do. Now, last thing here, I know we've gone over the hour, but I think landed cost is something we got asked about, so I will definitely cover this as well. So basically, you can set whatever kind of landed cost you want, and it lets you basically add additional costs to your inventory, to your valuation. The caveat here is that you have to use real costing and perpetual valuation, which is in our system now is the FIFO option. So ultimately, you would not be able to use this without having these things set up. So we're gonna go ahead and go through this a little bit. So there's split methods as well inside of this. We can jump back to this really quick. For the time being, I'm going to show you how to do landed cost. We're going to go here, go to inventory. In our reporting, should be right here. We go. Landed cost types. So I've set up customs and I've set up freight. Freight is a normal one. You basically can go in, create whatever you'd like. It's under the all product category, and you got to set the product type. So I've set it as a consumable, but you can set it as a product. I wouldn't set it as a storable product because it doesn't quite make sense, nor a service because it's not. It's a consumable, so that's generally how you'd want to add it. Obviously, you can set a base price, but as with anything in Odoo, you can change it as you're going along once it becomes a line item in the system. The split method is interesting though. And the account you're going to set this in is also interesting because you can add whatever account you want, but for the sake of the demo, I put expenses just to simplify things. But the split method. So this is the most important and a highly weighted section of the landed cost type. So it depends on how you use this landed cost, right? And so this is where you would pick that. And for this, I've picked by quantity. So let's see what that means. So say we have split methods for a transfer of 8 bricks, which are $5 each, and 2 logs, which are $10 each, and a landed cost of $100 for the shipment, or whatever your your costs are associated with. So in the equal split, it will basically take whatever items that you have and then split it down the middle and associate the price for for both based upon that. While that's a good way to do it, if you're using equal or like products, it can be an easy, simple way to do it. But it can be wrong if, say, you are doing bricks and logs that don't weigh the same or don't get charged the same. So, obviously this is necessary to your business, and you need to figure out how exactly that your landed costs associate with your inventory. But that being said, equal just basically means an equal split of the items that are there. So if there are 3, it would be divided by 3. Now, quantity split is basically the amount of cost divided by the quantity of items landing. So because there are 10 items here, we're going to do 100, which is the landed cost, divided by 10 units, which gives you a $10 cost for each brick and log. And this is the same thing. If we added a third inventory item, and they had 3, it would be $100 divided by 13, and then dispersed throughout each item. Now, with current cost, it gives you a ratio. So there's 5 actual landed costs or splits that you can associate with. The last 2 are weight and volume, which are fairly straightforward. You don't necessarily need too much explanation on that. But obviously they use a ratio as well based upon which one you're using. As far as current cost goes, it will actually take the amount of each and then create a ratio and then separate it based upon that. So for example, in this example, we have $40 worth of bricks, I believe, and $20 worth of logs, which creates a 2-to-1 ratio, which then gets divided equally. So it gets divided by 2/3 into the 100 and by 1/3 into the 100 for the logs. I hope that's fairly straightforward. So let's see how that works. And obviously we're going to need two products for this. So we're going to go ahead and save this in, and just to make sure that our customs is good, it's by current cost and still in expenses. Perfect. We're going to go into our purchases because you want to associate a landed cost with a receipt. So we're going to, again, buy from vendor, and we're going to buy our Mustang and our Duosonic. Now, the Duosonic should say Perpetual Automatic as well. And so just to make sure, though, we want to make sure that our product category is configured properly. And if it's not, this won't allow us to do so or work well. So let's just say we're going to buy 5 Mustangs and we're going to buy 2 Duos. And I'm going to save this in, and then I'm going to confirm the order. And if I've set this properly, it should allow me to do this. It will allow me to properly create the purchase order and properly receive the products, and it will affect our accounts exactly as it should. And it seems as though I've done that. So we're going to go ahead and receive this, and we're going to go ahead and validate this. So this is what I was talking about, and I did this purposely, actually. So the cost of our Duosonic is currently equal to 0. So we have to configure the product to avoid the incorrect valuation. So the great thing about Odoo is that, again, if you mess something up on your own, it will get fixed, or it won't get fixed until you fix it. But what happens is it will give you the validation warning or error, depending on what it is, to rectify that mistake. So we're going to go back, we're going to go cancel, and we're going to go back to our PO. At this point, we have a build quantity of 0 on both. So what we have to do is go in here, and actually it does not allow us to build this properly because we've already sent out this quote. So actually what we've done is a huge mistake. We haven't been able to create a proper movement in the system without because we didn't bill it properly. So what I'm going to do is go ahead and just create a new one, and I'm going to go from vendor and add the Mustang 10, say 5 here. We're going to go Duosonic 2, and this time we've set, I'm going to set a price of 15. So now we have a total valuation of $80 at this point. So we're going to save this in, confirm this order. We're going to receive the products. We're going to validate the products. And notice this time we didn't get that issue. So now we can actually have a valuation here. So now we're going to go back to purchases. And actually, so now we can, now that we have the receipt associated here, what we can do is now associate a landed cost with this. So we're going to go to, or I believe it's inventory, go to products. I believe it's in purchase. Hang on one second. Let me just go into accounting. I think this is where we do it. So we're going to do a porting. And journal entries. And we're going to create this here. We should be able to actually create a landed cost from our inventory, but I'm not quite sure where that goes. So we're just going to do it here. And basically, we're going to reference this and say landed cost and put it in our stock journal. Add a line, and we should be able to add freight. Ooh, am I spelling that wrong? Oh, this is the account. Sorry. This is going to go into our stock valuation, and we should be able to put landed cost. And it should automatically create our number for us, but that I am missing that number. Where is it here? Okay. Valuation master data. I believe it's different in V12, so I am not sure exactly where to post this, but I can, if you have any questions specifically regarding landed costs, we'll get back to it. Please just reach out to me, and I will, we can do a one-on-one and show you exactly how to do that landed cost. But that being said, we should be able to, I think that's going to conclude our demo today, or our webinar. Just to go over in summary, we'll go with costing methods. We went over costing methods of standard, average, real, went over periodic and perpetual inventory valuations, and finally landed costs, which didn't quite go so as planned, but I know we got a question, so we will definitely address that, as well as see the question, and if you contact me directly, we can actually go through it after I figure this out.
All right. Well, thank you, Manindra. Do you have time to take questions today? I mean, I know we've gone a little long.
Yeah, sure. We could take a few.
Okay. Well, then I wanted to thank everybody for watching us today. If you're watching live, don't worry, stick around. We're going to take a quick break, but we'll come back to answer some of your questions. If you're watching us recorded, this is the end of the webinar. Once again, if you would like to get in touch with us, you can send us an email to webinars@odoo.com, or if you would like to get in touch with Manindra directly, you can see his information right there on your screen. Manindra, is there anything else you would like to add before we go for the folks who are, for the recorded folks?
Thank you for watching. If you have any specific questions, please get in touch. I'm actually just gonna, as soon as we take this break, I'm gonna figure out how to do this landed cost thing really quickly. So if you want to see that specifically, I will have an answer for you right after this break.
Great. Thank you. And like I said, live folks, stick around.